Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition where we're going to be focusing all on the macro numbers. The CPI inflation number has come out. The headline print is at 5.7%, in line with major consensus on the D Street economists and analysts that have been pointing out. This is a sharp fall when you see and compare it with on a year-on-year basis and on a month-on-month basis as well. Now, of course, to understand more in detail as to how do you read these numbers, what does it really mean for the RBI and the rate policies going forward from here on as well, we'll get to speak to a very special expert on the show. Ms. Rajani Sinha is joining us, Chief Economist at Careedge. Welcome, ma'am, and thank you so much for taking the time out for this discussion. Now, India's retail inflation or the consumer price index for the month of March has eased compared to the previous month as well as on a year-on-year basis, and it's coming at 5.7%, which was also the larger expectations as well. I wanted to begin by understanding from you, it's definitely a dip from 6.44% of February. Were you also penciling in a similar number?
Yes, Sakshi, our expectation was 5.7% only. And this is mainly because of base effect. There is a very high base effect of last year playing on this number. So we were expecting it to slip below 6% this month.
Okay. Also, wanted to understand from you, just like how you pointed out on the large high base, that has caused this kind of a fall. We do remember that in March last year, there was the Ukraine-Russia war taking place and inflation had suddenly shot up to 6.95%. But on a month-on-month basis also, we've seen a dip right here. The last month, we actually saw milk prices were a shocker. We are waiting to see some more detailed print for this number as well. But is that going to be a worry point right now?
So I haven't looked at what has happened on month basis. But overall, our expectation is that going forward, we are likely to see inflation moderating from here. And one strong factor would be the base effect. But if you ask me, apart from the base effect, what are the factors that would be playing on inflation? One would be that we do expect food inflation to also come down from these high levels. The very high number that we had seen in the previous 2 months of 6.5 and 6.4%, which was higher than market expectations, that was because of a spike in food inflation, specifically cereal inflation.
Okay.
So
In
cereal
fact, we
inflation,
do have, Ms. Sinha, we do have the food price inflation now. The number for the month of March has come in at 4.8%. Now, this is definitely a relief, which has actually come down substantially from 5.9% that was recorded in February. That also was easing, seen as easing in the previous month as well. And this sharp dip has come about. Do you see as a major relief is the food price inflation really coming down to below 5% now?
So, yes, definitely that's a big relief because overall food inflation was contributing more than 40% to the overall CPI inflation. So, with food inflation coming down, that would be a big reprieve. And food inflation specifically also has a high bearing on household inflationary expectations, which then really builds into overall inflation going up, including core inflation. So, in that sense, it is a big relief. And I was expecting cereal inflation to go down because of increased supply of, the rabi production has been healthy, and with the supply likely to increase going forward, we were expecting food inflation to gradually moderate from the current levels.
Okay, understood that. Some more data points that we've got. I mean, I'm still waiting for cereals, vegetables, and the milk prices. That's what we are interested in finding out right now as well. We'll circle back to that again. But the data points that I'm right now getting are rural inflation data for the month of March. That's coming at 5.5% versus 6.7% in February. Also, March urban inflation now stands at 5.9% versus 6.1%. Not a substantial ease when it comes to urban inflation, but definitely prices reducing in rural inflation. That could be a major relief again. How do you see the rural inflation versus the urban inflation?
So, the food inflation falling more would have a bearing on rural inflation, and probably that would explain why rural inflation has gone down more than urban inflation. And that would overall be good for the economy because we have been waiting to see the rural demand improving. And we are seeing some signs of improvement in rural demand coming. So it would really be good if they get comfort on inflation front. That would help in improving overall rural demand in the economy.
Okay. Now I also have the current data for milk products. Now that has seen a rise, I believe, at 9.3%, and cereals and products are at 15.3%. Vegetables, however, are down at 8.5%. How do you see these particular products, and is milk and dairy products, is that going to be still a bigger worry, because the dairy companies have been continuously hiking the prices in the month of March and for April also. So would that be a continued worry?
So, Sakshi, for the milk inflation to go down, it would be more sticky. One of the reasons for milk inflation to be high is also because of feedstock prices being high, which is again interlinked to cereal prices being high. So, gradually, as the cereal price inflation increases, as the supply of cereal increases in the market, and we see the cereal price inflation moderating, which has happened in this month, though a gradual moderation, but the for it to percolate to dairy products will take even more time, and it may still remain sticky and not go down as much as we would want it to.
Okay, understood that. I do have some more breakup rights there. As far as the final print for the month of March, as far as food and beverages, we've already tackled. Now, when we see clothing also, that has also seen slight an uptick right there as well. We've also seen slight uptick coming in on the fuel and light prices as well at 8.91%. So that's something that we should figure out. And clothing and footwear has come in at 8.18%. Housing has come in at 4.96% as well. What I'm most interested in finding out is what is the core inflation right now. I'll continue to wait for that. But I wanted to understand just on the headline figure, 5.7%. Now this would be somewhere around a 15-month low, and it's come back below the 6% mark of the RBI's comfort band about after 2 or 3 months, I believe, if I'm not wrong. What does this signal? We've already seen that the RBI has kept a status quo as far as the rates are concerned. Would this 5.7% headline inflation give an additional conviction to the RBI in the way they decided on the rates, and we could perhaps expect a prolonged pause?
So RBI had factored this. There was expectation that inflation would go down because of the base effect. And that's also a strong reason why they decided to go for a pause. In fact, what our expectation is that going forward, we are expecting inflation to moderate in the months to come. Overall, our projection for CPI inflation average for FY24 is 5.1%, which is little lower than RBI's projection of 5.2%. In that situation, if inflation continues to moderate and move towards 5% level, we can expect RBI to remain on hold. So we do not think that there would be a necessity for RBI to come again and hike. But having said that, the situation is quite dynamic, very uncertain, especially with this uncertainty around monsoon and El Nino. So we have had Skymet coming and saying that monsoon could be below normal in the current year. So in such a situation, it is difficult to say what's going to happen on inflation front. But right now, our working shows that inflation is going to continue moderating, and hence RBI is unlikely to come and further hike.
Okay, I do have the core inflation data also, Ms. Sinha. It's come in at 5.8% versus 6.1% on a month-on-month basis. Now, this is also a relief because it's come below the 6% mark as well. Were you penciling in, below a 6% number for core inflation? And does it give further comfort level to the RBI now?
So we were expecting core inflation also to moderate, but we were still expecting it at around 6% level. So the number has come lower than our expectations. And again, that's a very good news because that would be a very important factor which would influence RBI's decision, because core inflation actually shows demand side inflation in the economy. And like I said, with inflation moderating, and likely to moderate further. So, one reason, like I mentioned earlier, one reason why inflation has been going down is because of the base effect. But also, like RBI mentioned in the last meeting, they would like to see further impact of the rate hikes that they have done so far. So,
Yeah.
that's also going to come into play. Secondly, we have been seeing very strong pent up demand post the pandemic. And that's also a reason that had pushed up core inflation. But now, with a lot of pent up demand having been met, we can see some fizzling out of the pent up demand. So that's also something which should give relief to core inflation as well as overall inflation in the months to come.
Okay. We also have the industrial growth number. Let's address that also slightly, and then we'll come back to the inflation picture again. February industrial growth is coming at 5.6% versus, sharp, about 5.2% on a month-on-month basis. So there's an uptick over there, and a sharper uptick when you talk about the year-on-year levels again, 1.2% to 5.6% as well. How do you read the industrial growth numbers, the IIP figure?
So that is very critical again, because one thing which we would be watching out for if growth is moderating, if domestic growth is moderating, because with the whole concern about what's happening in the global arena, that is something which we would be watching out for, and that's what all market participants are expecting, that we could see some moderation in domestic growth. So it does come as a, I would say, as a relief that the growth number is showing an improvement.
Right. Let's circle back to the inflation figures as well. Another thing that I wanted to understand from you, we've already seen that, the RBI has moved ahead and, decided to, pause the rate hike cycle. But, do these numbers, give you any kind of an indication that perhaps we could also look at a rate reversal cycle, rate cuts happening sooner than expected?
So I don't see rate cut happening, at least for this year,
Mm-hmm.
because even if I look at the growth and inflation projection, so on inflation front, we are expecting average of 5.1%, which is a moderation definitely, but it's still much higher than RBI's target of 4%. Now, if
Right.
we look at growth, we are expecting something like 6.1% growth. But if you look at RBI's projection, RBI is pretty optimistic. They're talking
Hmm.
about 6.5% growth in FY24. So, in
Hmm.
such a situation where we are expecting a decent growth, and I would say around 6% is a decent growth given what's happening all around us. So, in a
Hmm.
situation where we are having, recording decent growth and inflation is still higher than RBI's target, I don't see a reason for RBI to cut rates also, unless
Okay.
the situation really deteriorates going forward.
Okay. And on the inflation projection then from the RBI, I mean, like in the last MPC's meeting, we saw that they actually marginally reduced the inflation projection for FY24 from 5.3% to 5.2% on the expectations of a record Rabi food grain production as well. So do you think that could be achieved now looking at the current numbers?
I think it's quite achievable. In fact, as I said, we are expecting a inflation to be even lower at around 5.1%. So we can get inflation lower than RBI's projection, but we have to take into account that the whole uncertainty around monsoon.
Yeah.
So if the monsoon turns out to be below normal, and more importantly, what would be critical is the spatial distribution of monsoon. So if
Yeah.
those factors turn unfavorable, then our inflation projection as well as RBI's inflation projection could go wrong.
Okay, and apart from monsoons, do you also see some other key factors that one needs to continuously monitor to look at whether the inflation projection and the trajectory is going as per expectation? Let's talk about the crude oil prices and also gold prices that have been inching higher as well.
So yes, apart from monsoon and food inflation, I think what will be critical is what's happening globally. So this whole global uncertainty, even the OPEC production cut, which came surprisingly few days back. So if we have more such surprises in offing, that would that is a high risk that we are running. And that's, precisely the reason why RBI has kept the window open that if need be, they could come and hike again. That's why they have, tried, emphasized again and again in the last meeting and prepared the market for chances of a further rate hike if need be. So yes, that is also a concern which we have to take into account.
Okay, and apart from the kind of factors that you really mentioned, what could be the other macroeconomic uncertainties that could also continue to weigh on the RBI's move on the rate cycle going forward?
So the other aspect is growth. So, while RBI's projection is quite optimistic, but we cannot deny that there are growth concerns. While we are doing relatively better than what's happening all around us, but with the global economy slowing down, with the global financial system under increased risk, with the whole uncertainty around us globally, I would say growth parameter is also a something that we need to closely watch. And especially when I say growth, I'm concerned about the global impact. I'm not currently not much concerned around what's happening on the domestic front. Because domestic front, we are even with some moderation expected. I spoke about some fizzling out of the pent up demand, but even after taking that into account, I think the domestic demand would be healthy. I am more concerned about, global, some, volatility risk and spillover of that on Indian economy. Having
All right.
said that, I must mention that a lot of external sector parameters like current account deficit, forex reserves are quite healthy, showing a reduced external sector vulnerability for India at this point in time. But I am concerned about any risk materializing globally and the spillover of that on Indian economy.
All right, noted that. Well, thank you so much, Ms. Sinha, for being with us and discussing with us all these insights about how do we read through the fine print of the macro data as far as the CPI inflation print is concerned and the IIP data as well, and what does it really mean for the RBI going forward and the way they would be looking at these numbers as well. But temporary relief, at least for now, as we look at the headline inflation number, India's headline retail inflation now down to 5.66% in the month of March at a 15-month low. Thanks to a favorable base again. And at this level, CPI inflation really returns to below the RBI's comfort band of 2 to 6% after nearly 2 months. And since the starting of 2022, remember, inflation had been above 6% threshold in all but 2 months and has spent 41 months in a row as well above the central bank's medium-term target of 4% as well. But looking at this, Ms. Sinha does believe that, perhaps the forecast that the RBI really has of 5.3% and 5.2%, that's really achievable. She also has her own target of 5.1% perhaps, and that could spell some good news going forward from here. And with that, we wrap up this special edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets coming up right up on your screens.
If you like the video, do like, comment, share and subscribe.